Welcome to the Dana Yee Show. I wasn't really planning a video for another couple days, but the market today was crazy and some really crazy stuff happened with GameStop, so I wanted to cover this and I got on this as soon as I could, basically. In short, GameStop was up over 100% on the day, so more than doubled, and in after hours, it briefly reached an additional 100% after that, which is really crazy. So in this video, I'm going to cover the history of GameStop and sort of the whole GameStop backstory, the news that came out that probably caused what you guys have seen, which is really crazy to happen, exactly what happened to GameStop and what you should do about it. Obligatory disclaimer, I'm not a financial advisor, I'm just someone who enjoys money and finance, so if you like that kind of stuff, make sure to bop like and hit subscribe, but other than that, none of what I say is financial advice, but let's get started. So I have 3 previous videos, I think, about the whole GameStop saga, but some brief history. GameStop is an American video game, consumer electronic, and gaming merchandise retailer. You guys have probably all heard of GameStop. It kind of has been dying down, might I say, the past few years. Recently, they have been struggling, at least for the past few years. Like, their current operating income is something like negative $500 million almost, which is kind of crazy. Recently, Ryan Cohen, founder of really successful online pet retailer Chewy, has had a spot on the board and wants to turn things around essentially for GameStop, and a lot of investors have taken notice. If we look at the GameStop charts, even just within the last 6 months, it was trading as low as around $5, and of course this little area is kind of crazy, really wild, right? So what happened kind of that caused this? So one catalyst was the fact that Ryan Cohen is now on the board of GameStop. Another catalyst is that a group of traders on Wall Street Bets noticed that the short float of GameStop was really high. Currently it's sitting around 42%, which still is really high, but I saw it at over 200% at one point. And as I covered in my previous video, it's crazy that you can short more shares than are available. And again, shorting is kind of like borrowing. So people were borrowing more shares than actually existed, which seems problematic, right? So now if we take a look at what happened, these are just, this is just a chart in Webull. It's went from, what is this? This is like $13-ish and hit a high of almost $500. That's ridiculous. And this is all in the span of a couple days. This is a daily chart right here. In response to the volatility, Robinhood and other brokers made the decision / were forced to halt buying of these stocks. So Robinhood and others halt buying of GameStop shares, which obviously infuriated people. And if people are only allowed to sell on these large platforms, then the price obviously is going to be driven downward, which is exactly what happened. On the 28th, I believe, they halted trading. So somewhere in this really tall candle here. And as you'll note, it peaked at 483 and then immediately sold off. And this daily wick is like, it came back down to $90 and it's kind of been just doing nothing, moving sideways, moving to $50, and then this huge green candle today. In response to the crazy drama that happened before, so everything pre-today, there was a congressional hearing about the whole Robinhood situation. It was called Gamestop. Wow, so funny. Who wins when short sellers, social medias, and retail investors collide? And there were actually quite a few notable people at this meeting. For example, Vlad Tenev, the CEO of Robinhood, Gabe Plotkin, who is the CEO, I think, and founder of Melvin Capital, which lost 53% of their assets under management in January by attempting to short GameStop. I'm not sure who Jennifer Schulp is. We also had Keith Gill there, who is the very well-known now Reddit Wall Street Bets member who made millions and was long on GameStop, I believe starting in 2019. Additionally, Kenneth Griffin, who is the CEO of Citadel, which is where Robinhood routes their order flow to, was there, and the CEO of Reddit was there, and Reddit comes up a little bit later in this story. So some other news that came out is that the CFO, Jim Bell, is going to step down in March. I believe the sort of sentiment was that they want to accelerate GameStop's transformation to the more digital age now, right? Because they want to look for a CEO that will have a more tech rather than retail background, as GameStop focuses on e-commerce growth. Because I think if GameStop is going to survive, they have to get into and thrive in the e-commerce space. Another interesting piece of news that happened was that Charlie Munger, very famous, very prevalent, very successful investor who actually I did not realize is currently 97 years old. So wow. During an annual shareholders meeting was questioned about GameStop and among other things. And he said, that's the kind of thing that can happen when you get a whole lot of people who are using liquid stock markets to gamble the way they would be betting on horse races. Right. So a lot of new investors piling into a lot of different types of stocks, including a lot of meme stocks. And the markets right now are very liquid, which just means there are a lot of buyers and sellers. And he uses the words gambling and betting. So instead of investing where you see value in a company and see growth in a company, he's equating this to gambling and betting, something like a casino or horse races, which I've never taken part of, but I guess that would be a good comparison. And he additionally goes on to say, and the frenzy is fed by people who are getting commissions. That would be Robinhood, either routing their order flows through Citadel or other brokerages who charge commissions for either stocks or options trading, and other revenues. So again, Robinhood routing order flows to Citadel, for example, out of this new bunch of gamblers. So he has just denoted the retail investor, a new bunch of gamblers. And of course, when things get extreme, you have things like that short squeeze, right? So he's referring to when GameStop almost squeezed up to $500 a share and then subsequently fell back just as quickly to $90, hovering around 50, and then now moving to 100, 200. It's just like all over the place. It's kind of wild. And he goes on to say, it's not generally noticed by the public, but clearinghouses clear all these trades. And when things get as crazy as they were in the event you're talking about, there are threats of clearinghouse failure, so it gets very dangerous. What he's referring to here is that clearinghouses usually clear for multiple brokerages, so if a clearinghouse goes down, then that might cause real financial trouble for the, not just Robinhood, not just GameStop, but for the entire financial system, the financial markets. And I think the name of this article, Charlie Munger basically said it's a dirty way to make money. He also said some negative stuff, I believe, about Tesla and Bitcoin, so I don't really know what I think about this, but it's just interesting because he is such a known voice in the investing community, so a lot of people listen, a lot of people hear this stuff. So back to what happened. If we go to the one-day chart, this is kind of ridiculous. It really did nothing kind of today, and then around 2 p.m. it really just started taking off, right? This is ridiculous, and it rose, it about doubled in 2 hours. But if you'll note, there's a little gap between the green and the gray. The gray is after hours trading, so after hours is open from 4 p.m. to 8 p.m. There's a little gap here. What happened is that the stock was halted is because of something called a circuit breaker in the system, which essentially means if the stock goes too high too fast or drops too far too fast, it'll get stopped. And that's kind of what happened here. If we pull up the Webull charts, let me go to a 1-minute chart. And you'll see here, nothing happened for these two candles. And that just means trading was halted. So I think this brought even more attention to it. And if you'll notice in after hours, right, this one candle is like, I can't even tell, but it's like $20 tall, 1-minute candle. And then it's just grinding higher, comes down. This is really, really quite the roller coaster. And I'm still, as of recording, after hours is still open, so it's still moving around a lot. One other interesting thing that happened is that Reddit is down after what its status page called a major outage. So naturally, GameStop originated on Wall Street bets. Not GameStop, but like the GameStop frenzy originated on Wall Street bets. So when people saw this massive spike where it essentially doubled in a couple hours, what did? They went to Wall Street bets to check out what happened. And I think this was right at market close, so everyone was trying to go on Wall Street bets. Everyone was trying to go on Reddit at the same time, and I guess this overloaded their servers, so there's a major outage at Reddit. That's really, really crazy. So for about an hour, people who tried to load the site were met with a blank white page. I believe it began to recover around 4 p.m. And another interesting thing is that a lot of the so-called meme stocks tend to trade as a sector kind of, so I was like, if GameStop is up, I wonder if AMC is up. Guess what? It is. It kind of has the same chart as GameStop, doing a lot of nothing for the day, spiking up at after hours, and then spiking up, and then coming back down a little bit. Like, note how similar these are, although GameStop was a little more flat in the middle of the day. And also Cost Corporation kind of did the same thing, did absolutely nothing for pretty much the whole day, and then at 2 p.m. just shoots up, and then after hours shoots up again, comes down a little bit, and is still moving around. So this is crazy. These are what are called sympathy plays. So I think the idea is that if you see one meme stock going up, that must mean that other people are watching other meme stocks, so you better pile into them as well. So what is next? I personally am accidentally kind of in a small position. I may update you guys over the weekend, but I was trying to scalp it very quickly and I basically got stuck in the halt. So I'm kind of selfishly hoping that it'll go up tomorrow, but it is a small percentage of my portfolio, so I'm not too worried if it goes against me. That's a rule I always like to keep for myself when I trade. To be completely honest, I can see this coming back down to 100, going down to 50 before tomorrow morning. I can also see it going up to 200, up to 300. Honestly, it would not be out of the question because if you just look at this, Since market closed, it closed around $85. It shot up to $200 in the course of like 50 minutes. So I really could see it going either way. And as we've seen previously, GameStop has a lot of momentum, whether it be to the upside or the downside. Like the couple days running up to before Robinhood banned it, GameStop just kept pushing and pushing and pushing. It's crazy. And then when it was halted, it just kept falling and falling and falling. There's so much momentum behind this name. And I think that's exacerbated by the fact that GameStop is a relatively small cap company. I believe their total market cap is $6.4 billion. So it would not take too many people to all push in at once versus something like Apple, which has a $2+ trillion market cap. Again, I'm not a financial advisor. I can't tell the future. If I did, I would be making millions from the stock market, but that would probably be insider information, so that's illegal, so don't do that. The point is, be very careful in GameStop if you have shares or options. Know how to manage your risk and know what you're willing to lose. And that's kind of not advice I have for you because this is not financial advice, but something I've been reminding myself of pretty much every day. I need to be very careful in the markets. Right now, volatility is so high, the markets are so irrational, and any piece of news, whether good or bad, will move a stock up or down a ridiculous amount. Like, people are overreacting to everything. It's ridiculous. So my advice to myself and my thoughts about this are, if you're investing, invest in companies that you believe in. If a company you believe in drops 10%, you should have no problem holding it through the 10% drop. If a company you bought drops 10% and you're like, oh my God, I gotta sell, that means you probably didn't believe in the company in the first place. When I see a company that I really, really like drop 10%, I'm like, it's time to go shopping, right? It's on sale. If I think it's gonna do better in the future, 10% right now is nothing to me. If you're investing, invest in a company that you would be okay with if it dropped 10, 20%, depending on your risk tolerance. And make sure you know what you're investing in. If you're buying GameStop because you see other people buying GameStop, you're probably going to be one of the first people who sells at a 50% loss if it drops and then watch it go up 200%, right? It always seems like the second you sell for a loss, it just goes up to the moon, right? That's because the market is, I think, 80% psychology, but I'm rambling a little bit here. Anyway, my point with that is that if you're trading or investing, know what you're trading or investing in, because if you buy something that someone else bought for solely the reason that they bought it, then you're not going to be comfortable holding through a 5% dip, which nowadays is really kind of nothing. You see stocks move 100%, 80% after hours. This is ridiculous. So hope you guys learned something. Make sure to stay safe in the markets, and I'll see you guys next time.